Walmart now shares ripping to another all-time high today. The retailer lifting full-year revenue guidance after beating top and bottom line estimates in its latest quarter. Walmart seeing gains in discretionary spending and home deliveries, and even saw a bump from holiday shopping. For more on Walmart's strength, let's bring in Bill Simon, the former Walmart U.S. CEO. He is now on the board of Darden Restaurants. Bill, great to see you again.
Hi, Melissa. How are you?
I'm good. By all accounts, this is a strong quarter across the board. And what was, interesting was the continued gains in the higher income household. I remember you saying way back when that those gains might be difficult to hold on to as the economy improves, as shoppers return to their normal habits. Could it be different this time around?
You're right. I mean, historically, they keep a percentage of those customers that gain, the high income customers, but the vast majority of them sort of migrate back to service and it's kind of a premium product when the economy allows them to. So the fact that they're sticking now sort of suggests one of two things. One, that they're not ready to move back yet, or two, that Walmart got a good shot at them and kept them happy. And that would be a real monumental positive change for them if that would be the case.
Bill, it's Karen. Thanks for being on today. So furthering that point, the e-commerce sales were really strong. And I didn't see the data. I don't know if you would know the data or take a guess of how much of those e-commerce sales are from that wealthier shopper, which I think it might be stickier once you sort of are used to doing it and it, maybe replaces Amazon or you do it alongside. Do you have a sense of how that shopper figures into e-commerce?
Yeah, I read through the report. It didn't give you that data point specifically, but it did say that much of their gains in e-commerce were from an improvement of the grocery home delivery business. That's debatable whether it's going to be the high end customer or not. I mean, it's primarily a price driven customer, but so many more of their customers, as they indicated in the report, are paying extra money for premium delivery service, which would support the point that higher end consumers are buying more online from Walmart and maybe providing Amazon with a little digital competitiveness.
Bill, one of the reasons why we love to have you on is because one might think that you would be biased to Walmart, always preferring Walmart over Target, but that has not been the case. And so I'm wondering, when you think about Walmart's valuation and you think about historic PEs, do you say Walmart is much more expensive than it has been historically, or do you say, Walmart is in a different business model now? It's got Walmart Plus, it's got subscription revenue, it's got advertising revenue, it's got a DTC business, and so therefore the valuation should be higher. We have to re-rate Walmart and stop comparing it to the historic PEs.
I think you're right, Melissa. I mein, if you just evaluate them as a retailer, there's no reason that the valuation that they're holding currently would apply. In fact, they mentioned again in their report, probably the third or fourth time, that they're approaching profitability on their e-commerce business, which means they're still not profitable. And so they've been pumping money, capital, CapEx, operating loss into this business for going on 10 plus years now. And maybe they're starting to see some of that impacted. And the valuations of a digital company, a digital business, are substantially higher than the physical businesses. Because if you compare category by category, Walmart's physical retail performance to Target, they're not dramatically different. In fact, they're really quite similar. The differences in their result are Walmart has a much more substantial digital business. It has a larger food business than Target, which is growing at a higher rate. And Target, when they did their deal with CVS a few years ago, kind of really got out of the pharmacy business, so to speak. So those three categories are providing substantial growth and value to Walmart now, and Target's lagging.